So let's read the question. The directors of X Limited resolved to forfeit 2000 equity shares of rupees 10 each. On these shares, rupees 7.50 per share was paid up, but final call of rupees 2.50 per share was unpaid. 1000 of forfeited shares were reissued at rupees 7 per share. So capital reserve account will be credited by. So this question once appear in UGC NET exam. So you all know that shares gets company have the right to forfeit the shares when the shareholders is unable to pay the amount either on allotment or in first call and second call or final call or all of them. So here the company forfeit 2000 equity share of rupees 10 each. On these shares, previous shareholders had paid up to rupees 7.50. So 7.50 amount will be transferred to share forfeiture account. So share forfeiture account will be credited by rupees 7.50 multiplied by 2000 shares. That means 15,000 rupees. So then out of 2000 shares, 1000 shares were reissued at rupees 7 per share. So here I want to say something like when the shares gets forfeited, the company can then issue those shares to other shareholders, but the maximum discount they can give is the amount which they received from the previous shareholder and which has been credited to share forfeiture account. Like share forfeiture account was created by rupees 7.50 per share. So on reissue, maximum discount a company can give is rupees 7.50 per share. But here 1000 shares has been reissued at rupees 7 per share. So face value is 10 and it is issuing at rupees 7 per share. So the discount they are giving is rupees 3 per share. So they can give 3 rupees per share discount as maximum discount they can give is 7.50. So 3 rupees is allowable. So share forfeiture account then will be debited at the time of reissue by rupees 3. And how many shares are gets reissued? 1000. That means 3000. So now we have to calculate how much amount has been credited to capital reserve account. So share for now the balance in share forfeiture account relating to the 1000 shares will be transferred to the capital reserve account. So now share forfeiture balance remaining for 1000 shares means those which are reissued. 1000 shares will be transferred to capital reserve account. So the amount will be like we have in when the we forfeit the shares, share forfeiture account was created by rupees 7.50. So 7.50, and at the time of reissue of 1000 shares we have given discount of rupees 3. So we have to deduct that. So and then multiplied the balance by rupees 1000 share which were reissued. So the amount will be transferred to capital reserve account is 4.50 multiplied by 1000, that is 4500. So here is another numerical. A and B share profits equally. They admitted C on the terms that C should bring rupees 12,000 as capital and rupees 8,000 as goodwill. And the new profit sharing ratio between A, B and C is 2:1:2. So A and B will share goodwill in which ratio? We all know that when a new partner joins in a firm, so he has to bring his part of goodwill, and that goodwill is distributed between the old partners in the sacrificing ratio. So we have to calculate sacrificing ratio here. So we all know sacrificing ratio is calculated by deducting the new ratio from the old ratio. So sacrificing ratio is equal to old ratio minus new ratio. So first calculate is sacrificing ratio. So a sacrificing ratio is previously it was getting 1:1, means he was getting half of the profits, and new profit sharing ratio is 2:1:2, means A is getting 2/5. So you have to deduct that from old ratio. So we'll get 1/10. Now we have to calculate this sacrificing ratio. So he was also previously getting half, and now he is getting 1:5. So we'll get 3/10. So the ratio at which A and B will share goodwill is 1/10 is to 3/10, that is 1:3. So this numerical is from marginal costing. So let's read. From the following information, find out the number of units that must be sold by the firm to earn profit of rupees 80,000 per year. So here other information is given, that is sales price 25 per unit, variable manufacturing cost 12 per unit, variable selling cost rupees 3 per unit, and fixed factory overhead 5 lakh and fixed selling cost 3 lakh. So whenever the question will ask you to calculate the number of units that would be sold to earn a particular amount of profit, so you have to apply a particular formula. Like when we calculate the break-even point in units, we use the formula fixed cost divided by contribution per unit. When we have to calculate BEP in units, we use this formula. So whenever the question will tell you to calculate the number of units that must be sold to earn a particular amount of profits, we have to just add with the fixed cost the particular profit, that is amount of profit we have to add with fixed cost. So here fixed cost we already know, that is fixed factory overhead 5 lakh and fixed selling cost is 3 lakh. So total fixed cost is 8 lakh and amount of profit is 80,000. And contribution per unit, so we know contribution per unit is calculated by contribution per unit, selling price per unit minus variable cost per unit. So selling price per unit here is rupees 25 and variable cost per unit is variable manufacturing cost 12 and variable selling cost 3, so 15. So contribution per unit will be rupees 10 per unit. So CPU, now we have got the CPU contribution per unit, so we'll write 10. So the 8 lakh plus 80,000 means 8,80,000 divided by 10, that means 88,000 units need to be sold to get a profit of rupees 80,000. This numerical is from leverage. So here, if sales of a firm are rupees 74 lakhs, variable cost is rupees 40 lakhs and fixed cost given is rupees 8 lakhs. We have to calculate operating leverage. We all know operating leverage is equal to contribution divided by EBIT. So now we have to calculate contribution and EBIT. So sales equal to 74 lakh, we have to deduct variable cost which is given 40 lakh, we will get 34 lakh which is contribution. Then we have to deduct the fixed cost which is 8 lakh, we will get 26 lakh which is EBIT. Now we have to put this into the formula. Contribution is 34 lakh and EBIT is 26 lakh. If you solve this, you will get 1.31 approx. So this is the operating leverage.